The words tax audit are two of the most feared words in the English language. So I wanted to take a few minutes to explain what a tax audit is, what it isn't, and how concerned you should be about it. What are the chances that your tax return will be selected for an audit? So, first off, what is a tax audit? A tax audit, in very simple terms, is just an official examination of your tax return. Most tax returns are not examined by a person, they're just completely automated. If anything, they are input into a computer by a person, but kind of processed automatically. So, a tax audit is an official examination of the IRS of your tax return. It's a very broad term, meaning that there is a wide spectrum of things that could be considered a tax audit. A simple request for a couple of receipts could be considered a tax audit. So, not every tax audit is a big, scary process. And the goal of a tax audit is to ensure that taxpayers are paying the tax that they owe, making sure they report their information correctly and ultimately are paying the right amount of tax. So, there are three different types of IRS audits. There is what's called a correspondence audit, also known as a mail audit. This is all done through the mail. And this is where the IRS simply requests documentation from you. Um, in full disclosure, I've been audited twice, and both times it was a mail audit because they needed some extra information. In one case, I remember very specifically that my wife's student loan information hadn't been reported to them, and we claimed a deduction on her student loan interest. And they just sent me a letter asking for the documentation. We sent it, and case closed. So 85% of the audits that were conducted in 2022 were mail audits. There are two other types of audits that are most common among either higher income taxpayers or businesses. Those are office audits, which are in person at a local IRS office, which, to be fair, you could be called in for an office audit if the IRS needs some documentation that wouldn't be practical to send through the mail, like a giant box of receipts or big ledgers that they would need to take a look at. A field audit refers to when an audit is done at your home or your place of business. That is mostly done with businesses. It are very high net worth individuals. It's not very common for regular taxpayers like you and me. So, what happens if you get audited? First, just take a breath. The chance of any sort of complex audit is very low for most people. I mentioned that most audits are done through the mail, are simple requests for information or saying that you miscalculated something or something simple like that. In any case, regardless of what type of audit it is, you will receive a letter in the mail first. If someone just knocks on your door claiming to be from the IRS and asks for money, don't believe them. One of the biggest ways to sniff out tax fraud is if the IRS supposedly initiates contact with you in any way except a letter in the mail. That's always their first point of contact. They don't email you, they won't text you, they won't call you first and ask for money. They won't show up at your house or your office. You will receive a letter in the mail first. So, once you get the letter, assuming it's just a mail audit, you can either agree to the IRS's proposal, which in the case I mentioned, they didn't have my wife's student loan information, so they were temporarily disallowing that deduction for student loan interest. So they adjusted my tax return upward by a few $100s. So I could have either agreed to their proposal and paid the extra, I think it was $300 or so, or I could have chosen to submit some documentation to show that the deduction I claimed was legitimate. So those are the two basic choices in an audit. You can either agree to what they're saying that you owe extra, or you can choose to submit further documentation and kind of challenge what their audit is claiming. Now, if you use the tax preparer, or even if you didn't, you can have an accountant review the audit letter and help you with your next steps. It's well within your right. You generally do not need to call a tax attorney unless you have a very complicated audit, because if you ask any tax attorney, their clients aren't people like me and you. Their clients are businesses, high net worth individuals, family offices, things like that. An accountant can handle most tax audits for you. So, the $1 million question: how likely is it that you are going to be audited? And check out some of these statistics. This number is likely to rise a little bit in the next couple of years, and I'll tell you why in a minute. But even so, the IRS audited just 0.38% of individual income tax returns in 2022. That means less than 4 out of every 1,000 returns are selected for a tax audit, and that includes the simple mail audits. So by income, there's a big difference between the audit rates of middle income individuals and people at the top and the bottom. So you may think that the most likely group to be audited are high earners, and you'd be right. 2.38% of people who earned $1 million or more got audited in 2022. And the reason is the IRS directs the majority of their resources where they think they have the ability to recoup the most money. They're not going to spend thousands of dollars going after taxpayers that make $100,000 a year because even if they find some tax errors or accounting errors, it's not likely to be worth it. So they only generally look for things that really stand out, which I'll talk about some of the red flags in a minute. But for the most part, the two groups that are audited the most are people who earn $1 million or more and people who earn less than who report income of less than $25,000. There is a lot of potential to recoup money at both ends in the eyes of the IRS because a lot of people who in that under 25,000 bracket are underreporting their income in one way or another. So the IRS takes a close look at those and they claim some, and lower earners are entitled to some very valuable credits, which are, targets of abuse. So there's kind of the short answer. But if you look at that $25,000 to $200,000 range, which we consider middle income for this discussion, the audit rate is 0.19%, which is very, very low. So I mentioned a few red flags will increase your chances of getting audited. Now, none of these will guarantee that you get audited. It might increase your chance from 0.2% to 1%. But just a few common red flags. Claiming $0 in taxable income is a red flag. I mentioned that lower income returns are targeted. Number two, claiming the earned income tax credit. That's a low income tax credit that is very, very lucrative if people can qualify for it. A couple more are claiming 100% business use of a vehicle. Very few vehicles are used 100% for business use, especially if it's your only car. So claiming something like that is a big red flag for an audit. If your deductions, specifically your charitable or your medical deductions, are unusually high, it could stand out. The IRS knows what the average person in your income range donates to charity every year, for example. So it's usually in the 2 to 3% of income range. Anything more than that could set off red flags. Now, if you donated a lot to charity, let's say you earn $100,000 and you happen to give a car to charity this year that was worth $10,000, that could certainly trigger a tax audit where the IRS would want more documentation. But if it's a legitimate deduction, you should absolutely claim it. But be prepared that that is a red flag that could cause the IRS to, at least ask you for some more documentation. Next, and this is the easiest way to get audited, is if your numbers don't match up to the IRS's records. Every time your employer sends you a W 2, every time your mortgage company sends you an interest statement, every time you get a 1099 if you're an independent contractor, all of those official tax documents the IRS also gets a copy of them. So if the number you report on your W 2 and the number that's on the W 2 that the IRS received that has your name on it don't match up, that is a pretty certain way to get audited. Um, and another red flag is if you have a lot of round numbers in your tax return. If you spent exactly $5,000 on medical expenses, gave exactly $3,000 to charity, earned exactly $70,000 last year. Round numbers are a good sign that you're just kind of making it up as you go along. In the eyes of the IRS, maybe you're not. Maybe you had a lot of round numbers, but that is a common red flag. And I mentioned a little while ago that the audit rate might jump up a little bit in the next year or two. And the big reason why is the IRS recently received an extra $80 billion of funding over the next decade. And one of the specific uses for it is enforcement. Now, it's not exclusively for enforcement, it's also going to be used for customer service, which the IRS has been severely lacking in recent years. In 2021, for example, only 11% of calls were answered to the IRS. So people didn't know what to do a lot of times with their taxes. So that's a problem that they wanted to solve. But most taxpayers shouldn't be worried. According to the guidance that was issued with the funding, the IRS is only using this to step up enforcement on tax returns with incomes above $400,000. So in those higher income brackets we talked about earlier, you could see the audit rates tick up a little bit, but in the mid to lower ranges, it really shouldn't be a big effect. So if you have any questions, please feel free to leave them in the comments. I'll do my best to answer each of them individually. And hopefully you found this video informative. And please click subscribe if you haven't done so already. 3, 2, 1. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. So go to fool.com/Frankel to get your 10 stock picks right now. The Motley Fool Stock Advisor returns are 381% as of March 23rd, 2023, and are measured against the S&P 500 returns of 113% as of March 23rd, 2023.